Hi everyone, a very good evening to all of you present here. I'm Nitisha Jain, tax expert associated with Clear, and my area of expertise is income tax. Today, we all are here to know about the topic financial wellness, how we can save our taxes, how we can maximize our tax savings by making more and more investments, and everything. So, before starting our session, I would like to thank you all that you all have joined in such a great number, and I'll make sure that we are going to make this session very useful one and interactive one. If you have any queries during the presentation, during the whole session, you can just post down in the chat box. My colleague Namita is there to answer all your questions over there. And once I'm done with the presentation part, I'll also be taking up few questions live at the end. So without any further delay, let's move towards our today's agenda. First of all, we are going to discuss about the new versus old tax regime, how you yourself can decide what is the best option which you should opt with, which you should follow for the financial year. Then, what are the tax saving ideas to increase your take home salary and how you can maximize your taxes by investing more into ATC deductions? Then, what are the tax saving avenues apart from ATC also? What are the NPS benefits and everything? Then, there are some common mistakes which every person do while investing. What are those common mistakes and what you can do to avoid those mistakes? Then I'll show you the demo of ITR filing via Cleartax, and at last this will be followed up by Q&A session. So let's move towards our first topic, which is knowing about the new versus old tax regime. So this is the second year in which you can opt between these schemes. And from last year onwards, we all were having the option to switch between the regimes, and this was long demanded by most of the taxpayer. But it came with the catch of removal of all the deductions and exemptions that were available under the old tax regime. But last year we saw that many people are still not having more clarity about the new regime, when to use it, who all can opt for it, what will be its benefits, and everything. So now we'll be discussing this topic in detail. Budget of 2021 has introduced a new tax regime which an individual taxpayer can opt of, lower tax rates coupled with very few deductions available and fewer exempt allowances instead of the regular tax regime where you have to pay tax at higher rates, but also there you have right to claim various exemptions and deductions. Salaried people have right to choose between the old or new regime every year, but the person who is having the business income cannot go back to the old regime once they have opted for the new regime unless you discontinue your business. So, a person who is having business income has to make this choice very wisely and have to choose between these two alternative tax regime, taking into account the long term tax implications. New regime has lower income tax rates for income up to 15 lakh. But what needs to be focused upon is that lower income tax rates are available only if the taxpayer is willing to give up all the exemptions and deductions which he or she was availing in the past previous years. So the salaried people are granted an option to choose between old and new regime at the time of making their tax declarations to their employer for the purpose of TDS. But even if any individual has forgotten to submit, so say for example, you are a salaried individual and in the beginning of the year, you have told your employer that you will be proceeding with the old taxation regime for this particular year. And whenever you will file your income tax return at the end of the year, at that time you came to the conclusion that you are getting more taxation benefit under the new tax regime. So you want to switch to the new regime at the particular time when you're filing your ITR. In that situation also, you can switch to new regime at the time of filing your ITR. But if you are having the business income, then for this year, if you have selected the new regime, then from next year onwards, you are not allowed to again go back to the old taxation regime. But this option is available for the salaried individual. If they have opted for new regime for this year, then again in the next year, they are having the option to again switch back to the old taxation regime. So as you can see in this table, between this is the table of new regime versus old regime slab rates. Income from 2.5 to 5 lakh is taxed at 5% in both the slab rates, in the both regimes. Then income from 5 lakh to 7.5 lakh is taxed at 10% in new regime. From 7.5 to 10 lakh is taxed at 15%. Earlier in the old regime, income slab from 5 to 10 lakh is taxed at whole 20%, and income which is above 10 lakh is taxed at 30%. In the new taxation regime, income above 10 lakh is also broken into three parts. 10 to 12.5 lakh is taxed at 20%, 12.5 to 15 lakh is taxed at 25%, and income which is above 15 lakh is taxed at 30%. Current tax system is complicated to say the least. But there is one very common question which comes into everybody's mind is that which regime is beneficial for me? So there is no one single answer to this, but although looking at the reduction in the tax rates, in first reaction which would come into everybody's mind is that new system looks better as it is having lower tax rates. So let's just switch to that. This should not be a criteria of selecting the regimes which you should go with. While figuring it out whether to choose between old or new, you should follow a systematic approach. What would be that? Here is what you need to focus upon. First of all, calculate all the exemptions that you are availing. If you are living on rent, you would be claiming HRA, correct? Which is the biggest salary exemption which anyone enjoys. Apart from that, the other tax free components include LTA, then food bill, phone bills, etc. All these will become taxable if you choose to shift to the new tax regime. Then, secondly, look at the deductions that you claim. As a salaried employee, two deductions that you automatically get are standard deduction of rupees 50,000 and your contribution towards your employee provident fund. In the new regime, you won't be able to claim these deductions because these are not available under the new regime, and also if you're having a home loan, that also will not be allowed under the new regime, which has now till now helped to reduce the taxable income to great extent of the people. So now combine these exemptions and deductions and minus them from your salary to see what is your taxable income and what it would be if you let go all of these deductions. So this should be a deciding factor for which regime you should go with. This is the Cleartax calculator. Namita will provide this link in the chat box. When you will go onto this link, and you will see this kind of page on your screen. First of all, you'll have to select your age group. Whatever age you are into, select that particular age, then click on go to next step. When you will click on go to next step, in the second point here, you'll have to enter all your income details amount, like income from salary if you're having, enter that amount, income from house property, any income from other sources, whatever income you're having, just enter into second point. Then in third point, you'll have to enter all the deductions which you are availing. Say, for example, if you have any EPF, then it will come under section 80C. Like that, section 80D, 80TTA, all the deductions which are available under this third point, you'll have to enter the amount into that. And then the fourth point will consist of the summary table of the new regime versus old regime comparison table you will see. In old regime, you will see how much tax you have to pay, what are you liable for, and in new regime, how much tax is coming. Both the regime tax rates, tax amount will be shown in the fourth point. That will be a summary table. So this calculator will help you to know that which regime you are getting more benefit into. You can use this calculator and just know it yourself that what will be good for you and what you should proceed with the particular financial year. So now just let's understand this by one example also. Say for example, Miss Y is an employee who earns rupees 8 lakhs a year. Being salaried person, she is just contributing towards EPF, she is having HRA, she is also having the LTA. Due to some family obligations, she is not able to save anything apart from EPF. Now let's see which tax regime is getting beneficial for her. So her annual gross annual income was 8 lakh rupees. We have entered in both the amounts. Then standard deduction of 50,000 rupees is deducted from salary from the old regime. Then ATC, EPF contribution 25,000, HRA 30,000, LTA 25,000. So net taxable income which is coming under old regime is 6 lakh 70,000 and under new regime is coming to 8 lakh. Coming on to the tax slab rates. 2.5 to 5 lakh is taxed at 5% under both the regimes. We have entered that. Now 5 to 7.5 is taxed at 10% under new regime and 20% under the old regime. So accordingly, the tax which he is getting under old regime is 46,500 and under new regime it is coming as 45,000. So by this example, it is clearly evident that she is getting more benefit under the new regime in spite of having some deductions. It is not mandatory that you'll always be getting more benefit in the new regime and always under the new regime. It will totally depend on your deductions. What are you claiming, the exemptions and deductions? What are those amount? What are the slab rate which you are falling into? Accordingly, these regimes you'll have to select. So this was all about the taxation regime, how you can opt whatever these will be the scenario. Now coming on to our next topic, which is the smart tax saving declarations, how you can increase your take home salary to a great extent. First and foremost is the HRA benefits. House rent allowance is the component of salary which is received towards the rent payment and is allowed as deduction from taxable salary. HRA, normally many people are having this doubt that whatever how much rent amount they are paying, that entire rent amount will be allowed as HRA exemption. This is not the case. HRA will be allowed. Income tax law has provided three conditions. So whatever will be the least amount coming from those three conditions will be allowed as your HRA exemptions. First condition, actual HRA which is received by the employee. Second, 40% of the salary which is received 40% of salary if the property is situated under non-metro city, or 50% if the rented property is situated in metro cities like Mumbai, Delhi, Kolkata and Chennai. And the third condition is actual rent paid less 10% of the salary. Whatever the amount is coming from these three conditions, least amount whatever is coming, that will be allowed as a HRA exemption. There is HRA calculator also of Cleartax, which is available on Google. Namita will provide the link in the chat box. By using that calculator also, you can yourself calculate what will be your correct HRA exemption amount. Now, some people would be having this question that what if I'm having a loan as well as I'm paying rent? So can I still claim HRA? Answer to this question is yes. Benefit of HRA can also be claimed if you own a house and are claiming deduction for principal payment under ATC and the interest deduction under section 24. Only if you are having, say for example, let's take one example. You have house property in Mumbai which is let out and you live in a different house in Mumbai itself and pay rent over there. So in this situation, can you claim HRA exemption? No, you cannot claim HRA exemption if you are living in different house in the same city and you have a self-occupied house in the same city. So now one more thing. If you are also unsure about how to claim HRA if you live with your parents, during this COVID scenario, we all were working from home and we lived with our parents. So now how can we claim HRA in this situation? So if you were also living with your parents, what you can do is you can pay rent to your parents if you are staying with them. This should be done by transferring the money or rent amount to their bank account or pay via check. Since rent is paid to the owners, the property must be owned by your parents. It may be owned by one or both of your parents. So you can deposit the money to any one of the parent in case of joint house ownership or the parent who is the legal owner of the house. Remember that you cannot be an owner or co-owner of this property since you cannot claim tax exemption on rent paid to yourself. There would be some documents also which you will be requiring to claim the HRA while staying with parents. You can just submit the rent agreement or rent receipts. Usually employers ask for the copy of rental agreement for their records. So you can submit those documents to your employer, and they will calculate the correct HRA amount, and they will include it under under your form 16, which will be issued to you. You can just enter into simple rent agreement with your parents. Now the rent amount which you are paying to your parents will be taxable in their hands under the income from house property head. They'll have to include it under in their ITR as the rental income, and they'll have to show it over there. So this was the HRA thing. Now, if you are having a home loan, how you can claim the taxation benefits over there? So having our own house is everybody's dream. If we are living on rent, so that is why the Indian government has provided many taxation benefits for the home loan benefits. So, home loan must be taken for the purchase or construction of a house, and the construction of the house must be completed within 5 years from the end of financial year in which the loan was taken. If you are paying the EMI for the housing loan, it will consist of two components: interest payment and the principal repayment. The interest portion of the EMI will be covered under Section 24 in the income from house property head up to the maximum limit of rupees 2 lakh, and the principal repayment will fall under Section 80C up to the maximum limit of 1.5 lakh. And if you have also paid the stamp duty, registration charges, transfer expenses, these all will become part of ATC deduction, again up to the limit of 1.5 lakh in the year itself in which we have paid those expenses, those amounts. So, if you are also, there is some deduction in respect of interest paid toward the pre-construction interest period. Say, for example, you bought an under construction property and you have not moved in yet, but you are paying the EMIs. In this case, your eligibility to claim the interest on home loan as a deduction begins upon the completion of construction or immediately if you buy a fully constructed property. So, does this mean you would not enjoy any tax benefits on the interest paid during the period falling between the borrowing of loan and the completion of construction? No. Let's understand this why. Income tax law provides for the claim of such interest, also called as pre-construction period, as deduction in 5 installments starting from the year in which the property is acquired or the construction is completed. Over and above the deduction, you are otherwise eligible to claim from your house property income. However, the maximum eligibility remains capped up to 2 lakh rupees only. Now, there are all the Chapter 6A deductions in under which ATC, ATD, ATTTA, and various AT sections are included under this deduction list of Chapter 6A. We are going to discuss all of those one by one. Our first and foremost, every taxpayer's favorite section is ATC, in which most of the people invest into and avail the taxation benefits. So, under ATC section, first deduction is about EPF. Employer gets this deduction for the amount which is contributed towards EPF of the employees as business expenditure. There is no tax liability for the employee in respect of contribution made by the employer up to 12% of the basic salary, beyond it which becomes taxable in the hands of employee. Likewise, in case if the aggregate amount of the contribution made by the employer towards the employee's EPF, superannuation or NPS account of the employee taken together, if it exceeds rupees 7.5 lakh, such excess become taxable in the hands of employee. Then secondly, if you are paying the tuition fees paid for education of two children, it will be an eligible deduction under section 80C up to 1.5 lakh. Fees can be paid to any college, school, university or education institution situated in India. Fees may have to be for full-time courses only. Then, if there is any annual premium paid for life insurance in the name of taxpayer or taxpayer's wife and children, that will also be covered under ATC limit. This deduction is valid for the premium which is less than 10% of the sum assured. And as I said in the previous slide, if you are having the principal repayment of the home loan, then it will be covered under ATC deduction limit of 1.5 lakh. And also you can claim the stamp duty and registration charges in the year in which you have paid those charges. Apart from this list, if you have invested into ELSS mutual fund, then you are having Sukanya Samriddhi Yojana, any national savings certificate, all these will form part of ATC reduction limit. Apart from ATC, if you are having any deduction for life insurance annuity plan, then ATCCC allows deduction for payment towards annuity pension plans. Pension which is received from the annuity or amount received upon the surrender of annuity, including interest or bonus accrued on annuity, is taxable in the year of receipt. Then, if your employer is making any contribution towards EPF, then 80CCD2 section comes into picture, which allows the maximum deduction up to 10% of the salary. There is no monetary ceiling limit under this section. Under in section 80C plus 80CCC, this altogether these two sections will form maximum limit of 1.5 lakh. 80CCD2, if your employer is making contribution in NPS, then this contribution amount will be over and above the limit of 1.5 lakh. And if you yourself are contributing in NPS, then 80CCD 1B will come into picture. Now let's talk more about NPS. So, if you are concerned about your retirement and are looking forward to plan with the tax saving benefits, then NPS is the best tax saving instrument. NPS is known as its investor friendly features, low cost structure, and its flexibility. Here you get to decide how to allocate your money for investments, for corporate bonds and equity. You can claim any additional self contribution up to rupees 50,000 under 80CCD 1B as the NPS tax benefit. The scheme therefore allows a tax reduction of 2 lakh rupees in total. 1.5 lakh is from ATC and additionally 50,000 is from ATCCD 1B. So from these two sections combining together, you can claim total deduction of rupees 2 lakh. As a pension scheme, it is important for you to continue investing until the age of 60. But if you have been investing for at least 3 years, you may withdraw up to 25% for certain purpose like your children's wedding or higher studies, building or buying a house or medical treatment for self among others. You can make withdrawal up to 3 times within a gap of 5 years in the entire tenure. There are two primary accounts in NPS: Tier 1 account and Tier 2. The status of Tier 1 account is default and Tier 2 account is voluntary. Withdrawal from Tier 1 is not permitted, while from Tier 2 it is permitted. So tax exemption which is provided in the Tier 1 account is up to rupees 2 lakh per annum. As I said, from ATC you can claim 1.5 lakh, and from ATCCD 1B additionally you can claim 50,000 rupees. So altogether from these two sections you can claim 2 lakh in total. But from Tier 2 account, 1.5 lakh is for government employees and for other employees it is none. Minimum NPS contribution which has to be made in Tier 1 account is rupees 500 or 1000 rupees per annum, while in Tier 2 it is 250. Maximum NPS contribution, there is no limit in both the accounts, neither in Tier 1 nor in Tier 2. You can make any amount of contribution as you want or as you are willing to do. So this is the two type of accounts. This scheme, NPS scheme, encourages people to invest in pension account at regular intervals during the course of their employment. After retirement, subscribers can take out certain percentage of the corpus. As an NPS account holder, you will receive the remaining amount as monthly pension post your retirement. This NPS scheme holds immense value for anyone who works in the private sector and requires a regular pension after their retirement. Now, talking about the tax saving avenues apart from ATC. First one is ATD, which talks about the medical insurance premium. If you are having a medical premium for yourself, your spouse, or your children, and your age is below 60 years, then you are eligible to claim maximum deduction up to rupees 25,000. But if you have taken medical insurance policy for your senior citizen parents whose age is above 60 years, then this deduction amount is going to increase up to rupees 50,000. If you have not taken any medical insurance policy for your senior citizen parents, but you are incurring medical expenditure on their behalf, then also you are allowed to claim up to rupees 50,000 on the medical bill which you have taken. But only the case would be that you have not taken medical premium for them, then only you will be allowed to claim the medical expenditure bill, otherwise not. Then 80 talks about the medical treatment for handicap dependent relatives. If the disability is 40% or more but less than 80%, then you are allowed to claim flat deduction of up to rupees 75,000. But if the disability is 80% or more, then you are allowed to claim flat rupees 1,25,000. If you have incurred medical expenditure on yourself or dependent for disease which are specified under 80 section list, there is a list of diseases which are mentioned under this section. If you are falling under that, then 80 will come into picture. So if your age is below 60 years, then you can claim 40,000 rupees or the actual amount paid, whichever is lower. But if your age is above 60 years, then you are allowed to claim rupees 1 lakh or the actual amount paid, whatever is the lower amount. Then, if you yourself are suffering from any kind of disability, then 80U section comes into picture. In case of any physical disability, including blindness or mental retardation, you are allowed to claim flat deduction of 75,000 rupees. But in case of severe disability, this amount will get increased to flat 1,25,000. Then, if you have taken any educational loan, so the educational loan not only helps you to finance your foreign studies, but also helps you to save a lot of taxes as well. If you have taken an education loan and you're repaying the same, then the interest paid on that loan is allowed as deduction from the total income under section 80E. This deduction is provided only for the interest part of the EMI and not for the principal part of the EMI. For any kind of loan, we get one receipt under which interest portion is different and the principal portion is different. So from that, only the interest portion is allowed as deduction and not the principal part. But the good thing under this section is that there is no limit on the maximum amount that is allowed as deduction. It is available for 8 years starting from the year in which you start repaying the loan or until the interest is fully repaid, whichever is earlier. It should also be noted that if your loan tenure exceeds 8 years, then you cannot claim a deduction for the interest paid beyond 8 years. So it is always advisable that an educational loan is paid within 8 years. This was all about the section 80 deduction list, all the chapter 6A deduction. Apart from these, if you are having any donations which you have made to any kind of NGOs or registered charitable organization, then you can claim the deduction up to 100% or 50% accordingly to the organizations in which you have made the donations under section 80G. Then if you are also having any kind of saving bank interest income, then if it is up to 10,000 rupees, then you are allowed to claim that interest income deduction under section 80 TTA. So these were all the deduction limit. Now, while investing, people generally make some mistake. So, normally while investing, we are so much risk appetite person, or we are ready to invest in deduct. If we are investing without looking the market history or that investment's particular past history, then it may create a problem to you. So, first of all, the common mistake which we make is not understanding the investment. Best way to avoid this is to build a diversified portfolio of the exchange traded funds or mutual funds. So if you do invest in individual stocks, make sure you thoroughly understand each company those stocks represent before you invest. Then second mistake which we do is that falling in love with the company. Too often, when we see a company we have invested in do well, it's easy to fall in love with that and forget that we bought the stock as an investment. Always remember, you bought this stock to make money. If any of the fundamental that you promoted you to buy into the company change, consider selling the stock. So don't do this mistake. Then next thing, we are having the lack of patience. Slow and steady approach to portfolio growth will yield greater returns in the long run. Expecting a portfolio to do something other than what it is designed to do is a recipe of disaster, right? This means you need to keep your expectations realistic with regard to the timeline for portfolio growth and returns. It is not always necessary that if we have invested into one stock, it will give us returns only. It may give us return, it may not give us return, and it may also create some loss for us. So, in that situation, we'll have to have some patience that okay, if this stock in which we have invested into is going down, we are having loss, then too we should have some patience to hold that loss or consider that it's fine, it will someday it will give a better return. Then too much investment turnover, so turnover or jumping in or out of the position is another return killer. Unless you are an institutional investor with the benefit of low commission rates, the transaction costs can eat you alive, not to mention the short term tax rates and the opportunity cost of missing out on the long term gains of other sensible investments. Now, perhaps the number one killer of investment rule return is emotion. The axiom that fear and greed rule the market is true. Investors should not let fear or greed control their decisions. Instead, they should focus on the bigger picture. Stock market returns may deviate wildly over a shorter time frame, but over the long term, historical returns for the large cap stocks can average 10%. So, over the long term horizon, portfolio returns should not deviate much from those averages. In fact, patient investor may benefit from the irrational decisions of the other investors. This may be the good thing. So we'll just advise is that make if you are making the investments into some kind of stocks or mutual funds or anything, just first of all study the whole scenario, whole market, be ready for returns and as well as loss also. You may get both the things, and accordingly only invest into the returns. And you may also plan for long term investments. Always short term investment cannot give you more returns or high amount of returns. Now I'll give you the demo of how you can yourself file your ITR. Just give me a second so that I can switch my screen. I hope my screen is visible to you. So yes, uh, how you can file your income tax return now. For that purpose, first of all, you'll have to click on to cleartax.in. Go on to that page. You'll have to upload your Form 16 over here. When you will upload your Form 16 PDF, you'll have to click on Proceed. When you will click on Proceed, you will see this kind of screen that awesome, we read your Form 16 successfully. If you have changed the job, you can click on Yes, I changed the job. If not, then no, let's proceed to e-filing. If you have changed the job, it will ask you for the second company's Form 16. You'll have to provide that. If you're not having, then you can proceed with no, let's proceed to e-filing. And here you'll see the summary table. Here mentioned will be your name and PAN number, then your company's name and PAN number. After that, you'll see the person information detail. Here, your first name will be mentioned, your last name, your date of birth, your PAN number. These things will be automatically populated from the Form 16 which you have uploaded. Then here you'll have to mention the address in the B point, And then you'll see the registration tab. What you'll have to do in this registration tab, your PAN number and date of birth will be mentioned over here. So this will be mentioned and they'll ask you for the OTP. You'll have to select Aadhaar OTP. If your mobile and Aadhaar are linked, then select this option and request OTP. Once you will request for OTP, they'll process your request and 6-digit OTP number will be sent on your mobile number or your email ID. You'll have to enter that mobile number OTP and you'll have to click on submit OTP. Once you will click on submit OTP, then they'll again process your request and they'll successfully register your PAN number over here. And now your return will be directly filed to the income tax portal. You'll see this kind of screen that we have successfully registered your PAN number. After that, your form which you have uploaded, that will be automatically, all the details of your income will be pre-filled from your tax return. So here you'll see your personal information details, your name, your Aadhaar number, your mobile number, email, father's name and everything. After that, your salary summary will be mentioned over here. Your name of the employer, their TAN number, all the income which you have earned from salary, the deductions which you are claiming, all these will be mentioned over here. Then in the salary tab, in the income sources second point, all the 5 heads of income you will be able to see over here. Salary, other sources, house property, capital gain and business and profession. So first one will be the salary, under which the employer details will be mentioned over here, the name of your employer, the company's name and what will be the employer type. And all the salary income, this will be uploaded automatically by the form 16 which I have uploaded. You don't need to fill anything manually or do any kind of calculations over here. And if you have to change any amount, if you think that some deductions or some amount is missing which was not included in your form 16, then that also you can manually incorporate. Once you're done with the salary head, if you have any other income, say for example, if you were having the interest income, then you can add the interest income from saving bank account. If you are having the interest income from deposits, add it over here. And any other income, say dividend income and everything, you can enter it under the other income head. Then if you are having any income from house property, then in C point you'll have to enter the house property income details. If you are having the self-occupied house property and you are also having the home loan, then you'll have to enter the interest amount in this house property tab. If you are having any rental income from house property, you'll have to include it in the rental income head. This is the way of including the house property income details. Or if you are having any home loan, then that also you'll have to include it in the C point. Then in D point, you'll see the capital gain head. If you have sold any kind of capital gain asset, then that will be mentioned over here. You'll have to enter that equity which you have sold, or any kind of mutual fund if you have sold, any capital gain asset if you have sold, that will be included in this capital gain head list. As per the date of sale and date of purchase, it will be automatically taking up that it is long term capital gain or loss, or is it short term capital gain or loss. Our system supports the Zerodha, then Upstocks. These all statements, scams, Carvi are uploaded. So if you're having any statement of those, then you can directly upload it in the table and it will auto populate all the data of your transactions. But if you are not having those statements and if you are having of any other broker, then there is one Cleartax Excel template. You can download this Excel template from this only, and you'll have to enter the data in that sheet, and after that automatically all the details of the capital gain income will be reflected in this capital gain head, and they will show you that what is the net gain amount which you are getting from this capital gain head, and accordingly taxation will be applied. If it is long term, then 10% or 20% accordingly to the slab rates, and if it is short term, then 15% will be attracted. Then if you are having any kind of business and profession income, see, this will be the, you'll have to choose the reporter provider. Cleartax Excel template, then these scams, Carvi, Zerodha, Upstocks, ICICI Direct Equity, Grow, these all are supported by our software. Once you have uploaded any of those, it will prepare your capital gain return and it will be successfully imported. After that, the deduction portion comes. Here you will have to enter all the section 80 deduction list. Section 80C, then 80D, likewise all. If you are having any 80C deduction, you'll have to enter this over here. If it is below 1.5 lakh, it will give you a pro tip that 1.5 lakh is the limit of 80C, which will help you to maximize on tax saving. Then, if you have entered any amount in the other income head, in the interest from saving bank head, then that amount, if it is up to 10,000 rupees, it will be included in this deduction limit of 80 TTA. 80D will come into this more deduction tab. In other deductions, all the remaining sections which were left of section 80 will be coming under this. Then once the deduction portion is completed, fourth point will be of the taxes paid. Here you'll have to upload your form 26AS. Form 26AS can be downloaded from the income tax portal. You'll have to log into your using your user ID and your password, and from there you can download your form 26AS and upload it over here. Once that is done, they'll ask you if in the tax filing tab your any amount of tax due is coming. First of all, you'll have to make the tax payment directly to the income tax portal. When you will click that tax payment link, it will redirect you to your bank account. You'll have to make payment, and once your payment is done, you'll have to enter that challan number, BSR code list, and the taxes paid details in this self tax payment column, which is in the taxes paid fourth point. You'll have to click on add entry, and here you'll have to enter your challan number, your BSR code, and your date of payment and the amount of taxes which you have paid. Once this is done, then in the fifth tab, which is tax filing, first of all you'll have to enter the bank information. Here you'll have to first enter the Aadhaar number details, and after that primary bank account, in which bank account number you'll have to enter, then IFSC code of the bank and the name of your bank. This is if once this is done, then in e-filing, as per your details which you have provided in the return, it will show you that if you are having the refund, then this kind of line will be appearing on your screen, and if you are having the taxes due, then you'll have to first make the taxes and include the tax payment details in the taxes paid column as the self tax payment. Awesome, we have refund of 19,600 is mentioned in this example, and also Cleartax will recommend you to continue with which regime is beneficial for you. Accordingly, it will give you the suggestion also that as per your income details, as per your exemptions and everything, which regime is beneficial for you. So in this example, Cleartax recommend you to continue with old regime, but if you want to compare and switch, you can click on this compare and switch, and you can switch to the new regime also if you want to. Then once this is done, you'll have to click on file your ITR. When you will click on file your ITR, this kind of final step page will be on a screen. You have to just tick box this, I have read and I agree to the terms and conditions, and you'll have to click on e-file my income tax return. Once you have clicked on that e-file your income tax return, your return is successfully filed. Then they will ask you for the minimum payment. First of all, make this minimum payment. Once this is done, and after that, your return will be successfully filed to the income tax department. and this will be shown on your screen that your e-filing was successful, return has been submitted to the IT department, and the acknowledgement number will also be shown on your screen. And after that, you'll have to click on e-verify your return, and e-verifications will be done from the by yourself only. And after that, once the return is successfully filed, the acknowledgement number and the next step will come on your mail ID. That what now you have to do the next. They will just send you the e-verification steps and everything, and how you can e-verify your return within 120 days, that you'll have to do. So this is how you can file your ITR using the Cleartax software. ITR 1 and 4 are now live. You can start filing your ITRs now if you have received your Form 16, and if you are not having any Form 16, then also you can file your ITR with the other income, whatever you're having. So, this was all about our today's session. Now, I would like to take up some questions. Yes, ELSS mutual fund are part of ATC deduction limit. Satish, yes, you can switch to the between both the regimes in Cleartax portal itself. As I showed in the last tax filing tab, you'll have the option to compare and switch between the regimes. There you can switch. Satish, about this professional development allowance, you'll have to consult with your company's policies. Actually, company's policies differ, so you can ask this to your HR. As it is easy filing, you will be having many kind of benefits if you file using a Cleartax software. If you are having any losses also, then you can include that in the ITR. And if it is loss, trading derivatives losses and everything, this amount can be included in the income from business profession head. No, there is no HRA limit for tax exemption. It will be depending on your HRA allowance amount and your basic salary amount. You can calculate the HRA exemption using the HRA calculator. I'll provide the link in the chat box. By using this calculator, you will be able to clearly figure it out that what will be your HRA exemption. There is no limit for that. Yes, you can also file your tax without Form 16. There is option in beginning itself. Whenever you will whenever you log in, then if you have for Form 16, you can proceed with Form 16 part. If not, then there is also option. No, I don't have Form 16. Then you can proceed with that portion. Then there you'll have to enter all the details manually. Yes, you'll have to submit the documents of HRA if you are claiming that to your employer. Yes, you can claim LD and HRA both the things at the time of filing ITR. And if you have any further questions after this session, also, you can write to us at support@cleartax.in. This is our support mail ID, and our support team is there to answer all your questions. Yes, NPS account will be opened separately. Yes, if you have Form 16 from one employer and not from another, then too you have to include both the salary details in your ITR. One you can proceed with Form 16, and for the one which you are not having a Form 16, you can manually enter the salary details. But you'll have to show both the things. Tax exemption in case of gift. If you have given any gift up to 50,000 rupees to anybody, that amount will be exempt. But if the amount of gifts is exceeding 50,000 rupees, then it will be taxable under income from other sources head. Vinod, if you are staying with your parents and you want to claim HRA, as I told in that HRA slide, that you can do by entering into simple rent agreement with your parents. You'll have to give the rent amount to your parents, and they will have to include the rental income in their ITR, and after that only you can claim it as your HRA in your ITR. Because education loan interest depends on when you want to start it. If you want to start after completing your college, then you can select that option. And if you want from beginning, then you can do that. Whenever you start paying from that date, your 8 years calculation will start. HRA and home loan can be claimed if both the things are situated in different cities. So I think all the questions have been answered. It was a great session. Thank you all for joining in such a great number. See you in the next session. Till then, take care. Bye bye. Have a happy weekend. Thank you so much.